Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate finance. Get ready because today we're cracking open a filing that's all about making money from loans and financial contracts, and it might just give you a headache if you're not a finance wizard. But don't worry, that's why we're here. This is an investment report for something called the Oaktree Asset-Backed Income Private Placement Fund. Now, what does that really mean for us? Well, it's a company that's investing in a whole lot of different kinds of loans and financial deals, trying to make money from the interest and fees generated. Think of it like a specialized bank, but for big investors. Right off the bat, let's talk about money. Specifically, what does it cost to have this Oaktree fund manage your investments? They're charging a management fee, and for Class F shares and Class I shares, that fee is 1.25% of the money managed. They've also agreed to waive this fee initially, which is nice, but it's good to know what the normal price would be. Now, even with some fees waived, the total yearly cost for running this fund are pretty eye-opening. For Class F shares, it's 2.49%, and for Class I shares, it's also 2.49%. That might not sound like a lot, but imagine you invest $1 million. Every year, close to $25,000 of that goes towards just running the fund before any investments are even made. That's a substantial chunk, and the fund's performance needs to be really strong to overcome these costs. Looking at the management fee specifically, it's set at 1.25%. This is the fee paid to Oaktree Fund Advisors LLC. For their expertise in managing the fund's investments, they've temporarily waived this fee, but it's important to remember that this is a cost that could come back later, potentially impacting returns. This is where things get really interesting. They're using borrowed money or leverage to boost potential returns. The filing estimates that interest payments on borrowed funds could be around 1.79% of the fund's net assets. This basically means they're paying interest on borrowed money, which adds another layer of cost and risk. If the investments they make with this borrowed money don't earn more than this interest cost, then the fund actually loses money due to leverage. So what's the main goal here? The fund aims to provide current income, meaning regular payments, and then a smaller goal of growing the money you invest over time. It's important to understand that this objective is not set in stone, meaning the company's directors can change it without you, the shareholder, getting a vote. That's a bit of a red flag, as it means your investment strategy could change without your direct input. Their main strategy is to put at least 80% of their money into something called ABF investments. What are those? Basically, they're loans and other financial deals secured by specific assets like mortgages, car loans, or other receivables. They're trying to get income from these assets. They break down the ABF market into three parts: investment grade, core, and opportunistic. Investment grade is the safest, typically with lower risk, while opportunistic is the riskiest, but potentially offers higher profits. They seem to be focusing mostly on the core segment, which is somewhere in the middle. A major point right off the bat is that this fund is brand new. It has no history of actually doing what it plans to do. This means we're taking their word for it that their strategy will work. Investing in a new venture like this is always riskier, because there's no track record to look at. And here's a big one for investors: the shares in this fund aren't listed on any stock exchange. There's no easy way to sell them if you need your money back quickly. They are an interval fund, which means they offer to buy back a small portion of shares periodically, but that's nothing like being able to sell them on a stock market. You should consider this a very long-term and frankly pretty locked-in investment. They're calling themselves non-diversified. This is a big deal. It means they can put a large chunk of their money into just a few investments. If those few investments do poorly, it can really hurt the whole fund. It's like packing all your eggs into one or two baskets, which is generally not a great idea. If you decide you want your money back and you haven't held your shares for a full year, they might charge you a 2% repurchase fee. This is to discourage people from pulling their money out too quickly, but it's another cost to consider if you're not planning on a long-term hold. This part is a bit technical, but it means that when they sell an investment, they might have to promise that certain things about the business they sold are true. If those promises turn out to be wrong later, the fund could end up having to pay money. It's like giving a guarantee on a sale, and if that guarantee fails, the fund takes the hit. Looking at who actually controls this fund, it seems like Oaktree Fund GP ILP had almost complete control initially. This is common when a fund is first starting, but they expect this to change as more investors come in through private sales. It's good to know who's in charge, especially at the beginning stages. This is the big contract detailing how Oaktree Fund Advisors LLC will manage the fund. It lays out exactly what they're paid for, the management fee and the incentive fee. The incentive fee structure is particularly noteworthy. They get paid a percentage of the fund's profits, but only if certain income targets are met. This could potentially encourage them to take more risks to hit those profit goals. Let's meet the people managing this fund. Brendan Beer is listed as the lead portfolio manager. He's got a background in structured credit and even served in the Navy. That's quite a resume. And assisting him is Loris Nazarian, who joined in 2024 and has experience in capital raising across different investment areas. It seems like a team with significant finance experience. This is a standard legal notice, basically saying that they are only offering these shares in places where it's legal to do so. It's a reminder that investing internationally can come with its own set of rules and risks. Finally, they want to be what's called a regulated investment company, or RICE. This is a special tax status that, if they qualify and meet certain requirements, can prevent the fund from being taxed twice. Once when the fund makes money, and again when they distribute that money to investors. They have to distribute at least 90% of their income to shareholders to keep this status, which is a good thing for investors, because it means they're aiming to pass on most of the earnings. Looking at Oaktree's approach, the focus on ABF investments shows a strategy centered on earning income from financial contracts backed by assets. The high fees, especially if the management fee waiver ends, are a significant factor. The fact that it's an interval fund with limited liquidity means investors need to be prepared for a long-term commitment. The risks they outline are pretty standard for this type of specialized investment, covering market volatility, credit defaults, and leverage. But the lack of operating history and the non-diversified nature are definitely points that call for extra caution. This isn't a quick flip investment, it's for those who can afford to tie up their money for a long time and are comfortable with the specialized risks involved in asset-backed finance. So what's my take? Oaktree has a strong reputation in alternative investments. Their strategy of focusing on asset-backed finance is interesting, potentially offering stable income streams. However, the high fees and the illiquid nature of the investment mean this is definitely not for everyone. Investors need to be very comfortable with the idea that they might not be able to sell their stake easily, and that a significant chunk of their returns will go towards fund expenses. The lack of operating history is also a major point of caution. It's a calculated bet on their ability to generate returns from a complex financial market. Alright, that's our breakdown of the Oaktree Asset-Backed Income Private Placement Funds filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord community linked in the description below. Thanks for watching, see you next time.